So you're welcome back. I'm still your host, Yanu Adegboro. Welcome back. So, like we were saying in the last discussion, we talked about the win. I have introduced to the pattern. The pattern. I'm introduced to the pattern, which is this. I told you about the pattern. The pattern left, for example, the market was going upward like this, right? Now it will be pushed downward by sellers, right? So the place, or let me do like this, okay, it's going upward, the movement was moving upward, it was moving upward. Let's say, for example, they got to this place, it starts coming down, coming down, coming down, coming down, coming down to this place. So the number of display, this was where the buyers were being displaced from this place, right? From top here. Let me it's represented by this week. You know, they were being displaced to this level, right? Now, this place becomes the equilibrium point, which is a decision point. A decision point. It becomes a decision point where the participants will have to decide. They are at loggerheads. They are at crossroad trying to figure out what to do. So this will become a decision point for the market participants, for traders, sellers, and whoever. So now, before the second session opens here, but it will pull down. You know, the last session, sellers were taking the market over taking over the market from the buyers, right? So that means at the close of the market we have selling, little selling, right? So the resumption here will resume with selling, put the market down. So before they will be displaced again by buyers who have the financial control over them. They will be displaced. That means this place will be what? This place will be. This place we have this week denoting the displacement of sellers. So the buyers will take the market up again. So that means the market is going upward. You know, some people will rush. Some weak traders will rush and place their stop loss. This market has bust out. All those people that are trading, breakout traders, they will rush. They put the stop loss here. They put stop loss somewhere here or thereabout. Some people put their stop loss here, tight stop loss. You know, some don't even put at all. So that means, and because you put your stop loss here as for you are buying, right? Prevention, you buy here. You buy here. If you are the type that buy here, you know, most many people, the crowd buy into sentiment. They thought it's gambling. Probably they buy here. So they have the knowledge of everybody that's buying and selling. The brokers, they have the knowledge. Probably you buy here or whatever, with a rush enter inside. So now what happens is that you are telling this, your stop loss there represents what we call sell stop. That's what it represents. That's what it represents. Sell stop. That was it is interpreted in your market orders. That's what you are telling the brokers when you put your stop loss. So as you are buying, you are selling. You know, you are buying, for example, you are buying Euro USD. So if you buy into Euro, if you buy into Euro, That means you are selling what? You are selling let me do it like this. Okay. If you buy into euro, this euro, right? Yeah. That means you, at the same time you are selling what? You are selling USD currency. Hmm? You know how the currency pair works. Yeah. At the same time you are selling this. So when you buy into this, your stop loss becomes a sell stop. Yeah. So what you are trying to tell the market is that I'm buying. Please, at the same time, sell for me. I'm looking for a sell. Sell for me at this level. So that means the market maker will come back here and take this order. Take this order from you. Take this order, bounces it up. So this is where it is good to buy with the market makers and not here. You don't buy with the crowd. You buy with the market maker who represent the larger participant in the market, who represent the composite one. You buy here, you buy here, you don't buy here. You buy here and move the price, then you put your stop loss here. Well, we will get into that in advanced class or thereabouts. So that is, I've introduced to the pattern. That's how the pattern works. That's how the pattern works. So the market must pull back to retest this place. So this place now become a strong resistance, become it's a price rejection zone in our pattern, in the price action traders pattern. It becomes a price rejection zone that is difficult for buyers to move higher. And once they cannot move here, the price will come down, descend downward. Yeah. So we have taken it my time to do the. So that's for decision point in uptrend, decision point in downtrend. I think by this explanation, you'll be able to grab the concept of the decision point, how to finding the decision point. Finding the decision point. You will see it in charts. This is it. And you see this place. The market comes back here. Market comes back here. See it. This place. See it here. Market comes back. Market comes back. Try it. This weekly chart. Weekly chart. You can imagine if my brother, this pattern I'm telling you. You can imagine what it contains in this market. This pattern, see it here. See it here. You may not need to take much. The tactics that I will show in the VIP session. You just read the candlestick. That's all you need. You don't need to fool yourself about, see here. See here. As long as this candlestick does not close below here. I've given you one powerful secret there. It does not close below here. I'm taking enough this thing. With this weekly chart, you can imagine the move. As long as I can get a rejection here, a displacement of this level. Can you see it? If I get this and I'm seeing price try to come back to this level, what do? I go straight to my lower time frame, what I call a chart refinement, pattern refinement. I switch over to my lower time frame to refine it, so I'm able to see clearly what is happening here. What is happening here? This pattern, the pattern, when you refine it, it will give you what I call flag. You'll be able to trade the flag. You'll be able to set up your trade in awaiting of the retest. If you are the one that know how to use your Fibonacci very well, at 62, you can also use your Fibonacci to time the market. to know the exact point where you will place your order, because your focus is here, right? You know where to put your stop loss, you know where to put your I'm leaving a lot here. So you guys are fortunate to get this pattern. Just back test, no indicator, it doesn't need indicator. So they just a simple rules you must obey, just simple rules. See here, see the price come back here to, it could not go above this place and it comes down. Weekly charts, it doesn't exceed this zone, it doesn't exceed it. See here, see what happened here, this little wick here, when you refine it in a lower time frame, daily or whatever, it will give you flag, and that's why you see a reaction here. That's why you see reaction there. You see this place? So that's why you see a reaction there. So that's why I give you the Euro USD opportunity to buy into Euro USD. Euro USD. Let me put on my internet. I will show you the trade. So next week, Euro USD have a strong clue that Euro USD will still be what we because it's right now bouncing off the weekly zone, and I could see, and we could get if you go to the forum, I posted a lot of this in the forum. We could get so many this in the decision point there, yeah, that displaces off the price as weekly OB. Yeah, this is it. Can you see it? This is it. Can you see it? Can you see it? You see this strong is a strong decision point. Can you see it? Price does not move down. You can imagine the huge, very huge. These 4 hours, very, very huge. All this place here, the market must react in the future of it. When market comes down, all this place you are seeing, market must react. It must react. That's why it reacted to this place. Can you see it? It reacted to this place. Market must react. You see this place, see this place, see it. That's why it came down to this place, this place, this place. You see it, you see that red candle, this place. Can you see it? So at each, when you see the pattern, at each level, when this pattern form, as long as you have a we have just an alternative week, the same candle but alternating week, it denotes the battleground between two markets, two opposing markets. The candle has the same nature, it has the same movement, but the wicks oppose themselves each other, right? This place. So when you refine it, you must get what I call this flag. This place here, if it happens to be in higher time frame, like weekly, like that one I've shown you now, if you go back to your 1 hour, you must get something like this. You must get something like this. A pull back a bit, then resumption of the bearish market. You must get something like this. Can you see it? So you must get something like this. So this now give you the opportunity to do what, to place your trade very well. Using this what I call the refinement, when you refine your pattern very well. So when you go to a lower time frame, you'll be able to see how to enter your DC. So the pattern setup is in the higher time frame, while the entry is in lower time frame. You can see that. So when you refine this pattern, it will gives you a flag. And what is you of course, most of you understand what I mean by flag. If you don't understand flag, this is a flag. See, this is a bullish flag, bullish flag, bullish flag. So the opposite is the bearish flag. Yeah. So when you refine it, I repeat, when you refine it through the pattern, you get this. If it is a bullish decision point, you get this point here. If you refine it, it must give you this. It must give you this. So That means price will react to this place because of what? Because of this demand zone here. We call this place demand zone or order blocks. Price will come back, we call to it to take this order here, to take out order here. Because this place is calling market makers, come and buy from me at a lower price. This is what this place denotes in a lower time frame. So you understand it, so that when you see this pattern, when you see it, you don't ignore it. You guys that are doing binary, this is good bet for you, sure bet for you. You don't use stop loss. You always take me your this thing. Sure bet for you, sure bet. Because when you know that this, you have a rejection here, like as you have in that this thing there, like as you have here. Where do you get a displacement? That's where we get, like you have here, this place. You can imagine when you see this rejection, what do? Place your whatever your strategy, either higher, low, or whether binary strategy. You can imagine the percentage. Whenever it is daily, you want to do it daily. You can imagine the percentage. See, market must return. See it here. Market must go up. That is the truth. That is the truth. See it. See here. See here. The wick does not need to be. It could be small. It could be long, but doesn't. It has to get a range. There's a range for the wick. There's a range. Yeah. You can imagine what happens there. I'll show you. I'll give you so many trade examples. Yeah. Where do I place this? Okay, let's go and use our this. Let's go and use our wow. See pattern, see pattern, see pattern, see pattern, see decision pattern. Very powerful. See it here. See this one. See this one. There are areas you must check. Not all. You understand? There are just simple rules. I'm coming. I will call to that. See it. Simple rules. Just simple. Once you get it and you filter it out with those rules, you get just 2 rules to filter your this thing out. So I'm able to get a potential one. See this place, displacement. See what happens here, displacement here. Can you see it? Because of what? Because of this range here, this low, this range. Can you see it? So when you get this, you have the doji sandwich. I call this the doji sandwich. Yeah. Because of what? Because this place was displaced because of what? Because of this reaction here. And this reaction turns to this from here. Can you see it? Market breakthrough here. It came up. Then there was a reaction here. This reaction hurt this place from going up. There was a reaction. At last it break through. But as market was coming down, they were looking at this place again because there was a reaction here. So this reaction denotes the numbers of retail traders that put their stop loss below this place. They put their stop so below here, or they put their stop loss here. Some of them put their stop loss, so they come down to hunt those stop losses here, and it was displaced off. That is that. So at every displacement or every bounces of price, you go back. When you look at the left side or the left side of it, there must be a reaction. There must be a reaction. There must be a reaction. And you see it? See this place? There must be a reaction. See this? This is a pounds USD recent price market. See it? This is a 15-minute chart. See it? It can happen in 1 minute. It can happen in even 30 seconds. If you go to trading view, see it here. And price does not move above this place. There's a trading tactics here. You can imagine this huge drop. And as price broke this through this place too, it was retested. There's a reaction there. That means my focus will be here in the future. And price came up to test it. See? Price reacted to it. So the two decision points. Now this place, can you see this place? What's happened here? So when you get a displacement off, you check what happened in the past. Something displaces that. Something happened in the past. So it's a battle. Training is psychology. It's psychology. This place came down because of here. It's a decision point. So I'm just showing you how to this place. You see, this is decision. That's why I mark this place downward. And in the future, we have it. I gave this signal in the forum. Yeah, I gave this signal in the forum, and you see the price came down. Yeah, I give this and price market really went down at the close of that day. Yeah, so can you see this place? The stops was taken out here because of this place. You see here, price does not close below here. Price does not close above here, above this range. Price does not close above this range. Oh God. No indicator. You don't need indicator telling you to trade it. You don't need it. See, you see a remarketer traded here. See reaction here. See it. Resume. Even came up again. It does not close, but as long as it does not close above this range. As long as it does not close above this range, see it. My God. This is 1 minute Euro USD. 1 minute Euro USD. See it. See it. You guys that are doing binary, I'm not. I don't do binary, so I'm not. I'm just showing you this. Need a short bet for you. God is a golf. That's another pattern. So that is I've shown you how to recognize decision point. So in the next video, we go straight to trade examples. I'll show you so many trade, how to refine the charts. God help me. So I have to refine the charts. These are the trade pattern, this trade setup, how to trade it. This is the one I posted on Friday evening on the forum, Euro USD. I'm still refining it. I told you about it that by next week it's going up because of this place. This is 4 hours refining of that weekly chart. The weekly chart displays has a displacement at other blocks. We have demand zone. So I'm not refining to 1 hour. I mean to daily. I gave you this thing, right? I gave you this thing on the forum, the daily charts. Check back on the forum, the daily charts. I gave you the wow. So the chart did not show us the flag until when we get to 4 hours and 1 hour. Yeah. So this is the flag. Can you see it? This is the flag for that decision point. This is the flag. I don't know if my internet is still somehow. Internet still is coming up here. Having an issue with our internet. And that section don't go. But that section don't go. Yeah. So that is the 4 hours. Yeah, I'll show you the. I think I'll show it to you. Yeah, this is the daily chart. Can you see it? This is it. Euro USD. This is where it was displaced off because of this place. You see, this is the decision point here. Here, this is a point. There's a decision point here. You see it. So go back to your this and check the look at that. This is the weekly chart. This is the weekly chart. This is other block or demand zone. You see it. So there will be a displacement of this week already denotes a displacement this week. The note, it's a weekly chart. So that's why under 15 minutes, under 15 minutes of it, you're having that. Under 15-minute chart, you're having that. 30 minutes. You're having the AMD, so it's already moving upward. This AMD stop hunt here, then distribution. It's already moving up to the close of Friday. So that's why I have a strong view that it will continue buying on Monday, starting from Monday, right? So recently, can you see this? Can you see this? See this here. On this one happens on the 17th of June. You can imagine how many pips that's contained here. You can measure it out. How many pips that's contained here. You can imagine. Wow. Almost about 394, 398 pips. 398 pips. 398 pips. Just like that. It does not close. Price does not move close. See, it came up to test it again. Can you see it? Sorry, it does okay. This place, can you see this one? See this one? See it? This is a decision point. A decision point. A decision point because of what? Because this place will move upward. You see the candlestick? So if you refine it, if you refine that place in if you refine this place, let's refine this one, you see the flag. Let's refine it to maybe like 30 minutes or 1 hour. Yeah, that's it. This. So you expand it to see this thing. Yeah. Wow. Can you see that? See it? So if you take the horizontal line, you see the reaction there. You see the reaction. This is the flag. This is a bearish flag. Market comes to be zigzag. So that means in the future of it, market came back to test that place. So that's why market come inside here. So you see it? See the test? It does not close. See the just a small range. If you do your stop loss, will not be much. You can imagine the huge. So I'll put my stop loss. I'm just showing you a bit about short position. So my target will be. So this one will be your. This will be your DC. So your stop loss will be here at this upper range. You can sell at, if you are the conservative type, you can sell here. So that means you have almost about 51 pips. 51 pips. Sorry. Yeah. Okay, so my target will be here. this low. Target will be here. And you see it. So you're almost about 36 pips stop loss, 36 pips stop loss. So you can see the reward risk ratio almost of a times 5. Yeah, times 5. That's your that's your that's your reward. That's your reward. And market came down. It blasts. If I happen to be aggressive enough, I'll put the market at this place. As the market push to this place, I will just sell here immediately. This instant sell. It will be almost about 9 pips, where your reward will be 22. That's times 22. But if you put it here, once the market breaks through here, and you can see it's another way you can trade too. You can use your Fibonacci, because you have refined it. It's like giving you opportunity to use your Fibonacci. I'm showing you what I teach in VIP. Can you see it? Give you this structure. This is structure. This is a pattern. It's a structure. It gives you this structure, and you enter here. Your stop loss will be. Your stop loss will be at that place. Yeah, this will be at 78, because the market comes inside the high probability zone of 78, 62, and it was executed. Can you see it? See blast. It never go back to hit your stop loss. Enough pips. So if you exit the first take profit, you can extend your this if you want to still be in the market. You can extend your this thing. Put your stop loss at the break-even point. So we'll go in the next session. We'll go straight into trade examples. So you see how to refine it